Very good afternoon to you, Ken. Now looking at the secondary market, there's been a lot of talk there with investors really leaving the secondary market, heading into the equity market, given what we've seen in terms of the falling yields. Talk us through the kind of situation that we are currently sitting in. Are yields still falling?
What we've seen this actually with, from the beginning of this week is yield seems to have stabilized a bit. Most yields, that is all the way from 5 to about actually 1 year papers, have all stabilized slightly just above 10%. There is, I think, a general market perception and a resistance to go below the 10% level. We've not been at these levels since late 2010. So what we're seeing from the market is most investors don't feel too comfortable going below 10% before they've gotten information from other variables such as inflation and MPC, the MPC meeting next week.
Let's look at some of those drivers of the MPC. Looking at the inflation numbers expected out this week, some seeing it at 6.75%. Is that the kind of number that you are perhaps seeing coming through?
Yes, I think for this month, because of the effects of actually fuel and reduced and electricity costs, that is from the previous month and this month, we might actually see these numbers. But I think going forward, as we start to feel as the 2-month lag on fuel prices hits the inflation numbers, we probably may see the inflation number begin to flatten out. And as we go approach the fourth quarter of the year, and we may start to feel a bit of pressure on food prices. So this may also serve to actually stabilize inflation at one level.
Like you say, the momentum for inflation is that of going downwards, but we do see some pressure coming through given food prices. But when you look at a number like 6.75% coming through for inflation, what kind of impact will that have on the MPC decision in next week's trading session? We know that some traders have already priced in an interest rate cut.
Yes, actually, I think both on the secondary bonds market and what we're seeing coming through from primary auction bids, a lot of the market has already begun to price in low inflation levels and a lower CBR rate. And I think coming to next week, I think basically a low inflation number will basically give the MPC a lot more confidence in cutting the rate. But also, you have to remember, we've also seen quite a bit of pressure coming on the shilling. We're now, as you mentioned, at levels of 84.50. So they may also keenly be looking at this. And there are a lot of maturities next month. So this will also put quite a bit of pressure on the shilling. We're looking at maturities of almost 40 billion. So all this will have to find a home. This will put pressure. So they look at all these factors, and also there's the global fuel prices which are rising. KPLC also announced that electricity costs will be going up. So all these are factors they will be keenly looking at apart from inflation.
And another thing is the magnitude of the cut and its impact on the likes of the shilling and the bond market as well as the equity market. What kind of cut can we see coming through from the central bank?
Basically, I think the first thing is that MPC has no choice. If they want the CBR to remain relevant, and as they mentioned, what they are basically, they have to cut it for it to actually match with the interbank rate. The CBK had mentioned that they look for interbank rates, they're looking at +2 or -2 CBR rate. So the current interbank rate is at about 8%. So the CBR rate is currently about 16.50. So you should expect a cut maybe to probably levels around 11% or between 11 and 12%.
Let's just turn our attention to the equity market, up in today's trading session, but marginally so. We saw it ending in positive territory in yesterday's trading session. A stock that has rallied today was Pan African Insurance, out with some rather positive numbers, up 14.29%. What do you make of Pan African Insurance?
I think there's also quite some positive news coming out for the whole insurance market on the continued growth in the insurance industry, and a lot more Kenyans are taking up insurance, getting better educated, and we're seeing a lot life and general insurance also increasing. So all this has served to boost confidence in the insurance industry, and we've seen this we'll continue to see this actually filter through to the insurance companies listed on the exchange. And we should see there's a lot more interest coming through, even on counters such as British American. So going forward, yes, there is a lot more interest in insurance, and it's actually good. It should diversify the market a bit more, because traditionally there's always a lot more interest in banking and financial services.
Well, that's where we have to leave it. Thank you so much for joining us now. That was Ken Minjire. He's the fixed income and money markets analyst at Stanbic Investments.